Now that we are in the 12th month of the year here in December, I want to bring you everything that happened in November. This is usually the time of year where we can finalize some of those predictions that we made earlier in the year and what trends might continue going forward. So in today's video, I'll break down everything that happened last month, stats, figures, everything you need so that you can make the best decision possible. So mortgage rates really didn't change a whole lot. Now, they've been around 7% for the last month or two after rising in September up from the sixes. Which apparently was a great time to buy, even though there was some trepidation about that. But I want to tell you right here on the spot, there's a local bank that's offering a phenomenal rate. If you're getting a conventional 30-year loan, it's 5.99%, and their jumbo 30-year loan is only 6.25%. That is the best rate, bar none. It's unlikely to last for too long. It's, an offer for them to try to build some business right now. So if you are looking, or if that's enough to get you over the fence on something, let me know. I'll connect you. Just had one client lock it in, and they are ecstatic because it saved them over 1% compared to one of the lenders I typically recommend. And even they were blown away by the rate that this particular bank is offering. So inventory wise, it's down. It's down 5% from the start of the month of November. Pretty normal. Usually we see the spike in inventory, or the peak, I should say, either in mid November, or sometimes it carries forward to early December, but this year it looks like it did in fact happen in November, because now we should stay about where we are throughout the remainder of the month before we see a slight decline into January, as a lot of properties that were listed expire at the end of the year. Didn't sell, right? Somebody took a moonshot. Here's my price. If I get it, I'll sell. If I don't, so be it. A lot of those expire at the end of the year. Days on market still pretty stable, but maybe starting to inch upwards a little bit. And prices seem to be inching up again. With condos, they were down in the 4 to 5% year over year range over the last few months. Now we're up to 7. And single families were in the low teens. Now we're approaching the high teens at 17% year over year. This one I want to spend a minute on, where I normally skim. So compared to last year, right? And one of the questions I get is this normal, right? Are we in our new normal? When are things going to change? And I just talked to an agent friend of mine at the gym today, and we both agree that what we've been feeling, the speed of the market or lack thereof, the pace of everything, is probably here to stay, at least for next year. We're both feeling pretty confident in that. Not going to see anything crazy change how things have been working. So despite last year rates being about a full percent higher, I want to take you down to the list to sale price ratio. So that second to last row here, condo sale to list price. In November, it ended up being about 97.5%. That means if we were asking $100 for a house, somebody bought it for $97.50. Last year, it was at 95%. Now, again, over dozens of transactions, this usually takes a few bigger, I'll say, outliers to really have this much of an impact, a full 3% almost impact. So what happened here? What I think happened here is that deal season, we're normally prime deal season right now, where people are able to find good values, find good deals. Sellers are willing and ready and motivated to sell, at least some of them. That is enough to typically drag that metric down around 95 or below for the condo sector. It's happened the last few years. Not so much this time. So I think we're really not seeing the strength of deal season that we are accustomed to. I think people are very dug in on both sides, right? Buyers are not going to overpay, or they can't. Their budget is their budget. And sellers are where they are, right? They're happy with their low mortgage rate, or the rent that they're getting is sufficient for them to hold it. They're really not motivated to do much of anything. And the single family space, you see that, but to a lesser degree, going from 97% last year up to 98.5% this year. Again, a stronger market. Now, with the new listings, again, we did see a dive here in November, pretty normal, slightly bigger dive than normal. December, we should see another decrease. You see it the last 2 years where it kind of pitfalls down there. So we should see even fewer new listings in December than we saw in November. This is the time where most people are focused on holidays, on wrapping up the year however they say fit, and then maybe reassessing, reevaluating early next year if they want to buy and or sell, what their 2025 is going to look like. So there was a bit of a surprise here in the magnitude of the decline in new listings, but I don't think we should be surprised with what we see here in December. Now, pending sales, again, pretty consistent for the last 3 years in the amount of homes that have gone under contract. Compared to last year, it's about the same amount less from October to November this year as we saw last year. So again, really wasn't too much of a shock here. We're really establishing, sit here for a minute. We're establishing some pretty routine patterns over the past 2 years. 2022 was when we really saw interest rates take a jump way upwards after that quantitative easing stopped. But since then, I think we found our balance. This is where we're going to be. Closed sales, we did take a decline from the past couple Novembers, but we also had a huge outlier of in October. Sometimes that's just the way the dates fall. So nothing to write home about there. Months of inventory for single family is declining again, back towards 6%, back towards balance. The inventory just isn't there. We've dropped from the 90s down to the 70s over the last couple months. So if there's not any homes for people to buy, then the strength of the few that are priced appropriately is going to be very, very solid. Now, the median sale price on single families balanced out over the last 4 months after obviously jumping way up. Tracking this against the mean price to the mean sale price, the pattern is essentially the same. We're pretty stable right now. But based on where we were last year, the metrics, right, the 17% year over year seems exorbitant. But I think there's the context here is that we had some weak months a year ago where we had a lot of lower priced homes, single family homes, primarily teardowns, selling, and that really dragged us down in this trailing 12-month data point that I use and how I do all this. Days on market, again, up around 60, basically where we were in 2021 before the world caught fire. So yeah, it's trended up a little bit, but nothing exorbitant, nothing to make me think that the market has actually really slowed down. Condos, again, you see what you see here, still not even approaching 6 months of inventory, which would be a balanced market. This is still a seller's market. Prices still extraordinarily stable. We did take a jump up this month. We had our highest median sale price on record for condos and townhomes. So again, the market appears to be picking up. People who are waiting for the election to be over to make up their mind seem to have made up their mind, and volumes are down, right? The amount of homes selling and going under contract are down, but they're still selling at prices above where they were last year. That's just, again, seller's market. That's what happens. If this holds, and there are a couple that were not closed out properly in the MLS that I think maybe would knock this down a couple days. But if this starts to increase towards 60, again, that doesn't scare me in one bit. We're getting back towards normalcy. And again, it's just a different kind of normalcy than we had in the past, a much lower volume market. The speed here was great, right around that average of 1.75 listings needed to get one home under contract. It's what the average has been over the last few years once you take the anomalies out of it, which we see here in these graphs, trending back towards 1.75, which, again, normal market, just slow. And people say slow means a bunch of different things. So I try to bring you all this context so you can understand exactly what's happening out there. Now, what's going to happen going forward? Obviously, nobody knows. Towards the end of this month, I'm going to bring you my predictions video for 2025, as well as recapping what my 2024 predictions were, where we landed compared to those, hold myself accountable here. So I'm excited to put that together for you. But with mortgage rates, I didn't think the Fed would have cut rates last month. They did, 25 basis points again. There's a possibility that they cut rates again at their meeting in December. I really don't think that they should, based off of the inflation metrics and where they still are starting to creep up again. So time will tell. But I don't think we should expect, no matter the decision, we shouldn't expect much impact on mortgage rates. I think we're going to stay around where we are for the foreseeable future. Again, thankfully, we have some local banks here who are trying to generate some business, who are offering some great deals. So again, if you want to be put in contact with them, just let me know. I'm happy to make that connection for you. But it's only applicable, again, this is where it gets confusing. It depends on your loan amount. That's also changing going into 2025, the amount that a 30-year conventional mortgage versus a jumbo, there is a cutoff. So we can have that conversation, how much money you would need to put down, all that stuff as well. Hopefully we can find you something good while this great rate is still available. Now, inventory-wise, very, very normal decrease. As I said earlier, usually peaks in November, December, peaked where it did in November this year. But we've seen 7% fewer than expected new listings compared to 2023, the same amount of time, right? January through November, we have seen 7% fewer new listings. And as a result of that, we have had 5% fewer homes go under contract. So it's a very, very similar market to what we saw in 2023. Um, and we can be surprised about how it happened, why it happened. But at the end of the day, if we have 2 years consecutively of very similar metrics and patterns, it's pretty bankable that we should expect that continues as long as there are not any substantial changes in the variables, which really are supply and demand. And behind those things, a lot of factors are at play. A lot of personal factors are at play, but we can only look at the macro stuff, right? Mortgage rates, stock market, unemployment, jobs reports, strength of the economy, all that. So I'll always keep my eye on that and bring you my 2 cents here. Now, prices, again, as I mentioned, the best month for condos we've had on record as far as the median sale price. I expect that to come down in December, but the damage is already done as far as the metric tracking goes. But it's still very strong. And if you haven't already watched the last video that I put out, I will link it down below in the description about what you can buy these days. A 3-bedroom unit on West Avenue versus Asbury, a 4-bedroom on Asbury versus Central, compared to what you could have had in 2022 compared to what you could have had in 2019. Because realism is the only thing that is needed to make a sound starting point. You really need to understand and get the right context for the decision that you're making. If somebody's telling you you should not spend over $500,000 and you should demand 4 bedrooms and 2,000 square feet, it's not going to happen. Absolutely no chance. You're better off not wasting your time digging around here and focus on areas or towns or parts of the country where that could work for you. But ultimately, again, this is a personal decision. I'm not here, nor is your financial advisor, accountant, or whomever, dad, uncle, cousin, able to tell you what to do with your money, right? What is it worth to you to own a piece of Ocean City real estate? What are those memories worth? All that goes along with that. There's emotion and there's also data and logic, right? We want to cover both of those sides. But before you get emotionally invested in this process, I believe you need to understand what you're getting yourself into. So make sure you check that video out if you haven't already. Always happy to talk through more of that stuff because, again, this is a very individualized process. Everybody's criteria is different. How you approach things is different. So I can put out the blanket information as much as I like, but nuance matters. So if you want to talk through what you're thinking, what your dreams are, feel free to reach out to me any of the ways you see here. I look forward to bringing you those predictions in the next couple of weeks, as well as another mid-month report once we get there in December. So thanks as always for hanging out. I'll see you next time.